and hit the recording button and then send it back to me and we'll, yep, okay. So here's the first question: have you done your budgets? And at some level, well, it's interesting. Out of that earlier poll, about 70% said no, and about 30% said yes. So that's great. It's great that some people have done budgets in their business previously, have come along to participate in today's workshop as well, because it's, or webinar, because you can always learn something more. You know, if for those of you who answered no, there's possibly two reasons. The first is you don't know why. And personal development guru Jim Rohn said, with enough reasons you can do anything. So I'm actually going to give you today quite a lot of the why, and I'll also talk to you about some of the how, but in real terms, I guess it's the 4-hour workshop that we're going to do in a week's time that will give you a lot more of the how, the more hands-on part of the how. But I'll talk about how today. But if you're, you know, I guess the question I've got to ask you is, are you willing to make a change? For those of you who said no and have never done budgets, I want a commitment. I want you to make a commitment to yourself, and that commitment starts with, this year I am going to. So if you've got a pen and paper handy, hopefully you have, to make some notes from today. If you've got a pen and paper handy, what I'd like you to do is write down, this year I am going to, and you just, whatever it's going to be. So what I'd like you to do is type in your response into the chat box. So some examples might be, learn how to set up budgets, draw up a plan to implement budgets, get training on how to budget. One of my favorite expressions is, give it my best shot. You know, it's like you've got to be prepared to commit to making a change, or, you know, this hour might be to no avail. So do you want to type in something into the chat box for me there now? Set up a budget that's real. Great comment, thank you. And I'm just watching as some of these comments come through. You know, at some level, these are you making commitments to yourself. It's not to me, of course. Adhere to the budget. Yeah, okay, there you go. So thank you. A number of you have put it down there. Even if you write it for yourself and I haven't seen it in the chat box, grow my business better. Yep, great. So it's about making the commitment. I'll talk to you about that commitment a little later on today as well. All right, so I'm going to, I just need the mouse back to here. I want to take you to the next slide, and you'll see the cue that popped up there, because the question that I am most asked is simply this. It's how can I budget? Yeah. It's a bit of a challenge. Michelle and I are sharing a mouse today. That's cool. How can I budget if I don't know what's going to happen? Have you ever asked that question? You know, the answer is pretty simple. Simple for me to say, not always so easy for you to do, but starting today gives you an opportunity. I say, create the budget and make it happen. So to get clearer about what that means, how about we look at our definition of budgeting? Because I think that's going to help you understand what I'm saying here. It says, budgeting is the process of declaring your intentions to yourself, your team, your support network, and the universe. See, I believe that with a clear message, there are unknown forces that move you in the direction you want to go. And budgeting helps you define your business. In fact, a couple of years ago, I found this fabulous statement from Ralph Waldo Emerson. He says, once you make a decision, and you know, the decision in this case we're talking about is budgets, the universe conspires to make it happen. So when you're clear about what you want to achieve, then your business will move towards you achieving those outcomes. Now, in Brightwater, we have a thing that we call the letter gauge theory, and for those of you who've been at Brightwater presentations, and I know some of you have been before, you'll always see this. I use this model over and over. Basically, Australia Post puts out a thing called a letter gauge, and it's a piece of cardboard with a 2 centimetre slot. And the question I like to ask is, what does Australia Post tell you in simple terms by the use of this tool? And in fact, ultimately it might tell you what the postage is, but prior to that, in simple terms, it tells you what fits. You know, that's all it is. It's about what fits. And so the next question I often ask is, have you ever had an employee or customer from hell? And the reason I ask that is that when we apply the Brightwater gauge to our clients' businesses, what we often find is a 6 centimetre slot, not that 2 centimetre slot. So did they target you, or did you let them in? You know, that employee or the customer from hell, my sense is that you let them in because you had no rules or you hadn't defined what your business really was. And I'm going to suggest to you that your budget helps you to define your business in terms of your customers, your team, and your suppliers. So again, you know, your budget will determine what sort of clients you're going to deal with and what sort of team and who your suppliers are going to be. So you start to define the business that you want. Now, I suggested to you that I will tell you why you bother budgeting in your business, and evidently it's about setting a target and creating and you know, hopefully getting the bullseye, but really it's about setting financial direction. And here are some of the things or the benefits of budgeting. It's to know where your business is heading, how much you've got to spend, how much capital you will need moving forward, how much profit you will make, which of course is important, and what tax planning you will need. And I don't want you to cringe about tax planning, because tax really is just a measure of success of your business. But the problem with most tax is it's not planned, and when it comes time to pay it in April of a year after, you know, you've had a successful year, you've then got to race out and find some money. Well, tax planning is about knowing the profit and having the money set aside to pay your tax. Like when you think about why budget, you also want to make sure that it ensures the activity that you do adds value to your business. Budgets give you a reference point to check your progress on the way, and we're going to talk about how you set it up to check your progress and to enable you to correct when off course. So the interesting word there is when. You see, you know, I resisted the word to put in if, because all businesses get off course at some point in time. It's the smart ones who know when they're off course. And when you're off course, you then have a choice. And really, managing a business should be about choices. So the first choice is you can change your actions to achieve the target. And if you look at the target down on the bottom right-hand corner, or you can change the target. So you'll notice what I've done there, it's changed the target. You see, one of the reasons that I'm often told people don't budget is this, and the reason people don't budget is that there's a belief that budgets are set in stone. And I'm suggesting to you that budgets are not set in stone. In fact, they simply provide a benchmark. And the benchmark against which your performance can be measured. So again, you can see the tool that we're building here called budgets is a very powerful and useful tool for you to be able to know how well you're performing. And by the way, when I talk about performance, as you'll see a little later on today, I'm not just talking about financial performance. I'm also looking at a thing that we call, or that's referred to as KPIs, or key performance indicators. So some of these will actually happen in advance of the financial results. So we're going to look at those areas a little later on. There of course need to be criteria for change. You know, changing your budgets just for the sheer hell of it makes no sense. But if you can identify that this criteria, what's realistically achievable, and I was talking to someone just a day or two ago about this webinar, and I think back to the time of the GFC. You know, budgets were set in that year, and then the GFC happened, things changed. Now you've got to work out what's realistically achievable. The second part, of course, is that the activity adds value to your business. Because really what we're trying to do is we're going to build budgets that add value. And by the way, that doesn't mean we have to go for growth all the time. We might be just going for better profits on the way through, but not necessarily going for increased sales. So adding value isn't just about increasing sales. There's an expression there called top line focused. And again, not just profit, because that's bottom line focused. It's a mixture of all of those things. So there are two types of financial budgets. The first are called performance budgets, and you might know them as profit and loss budgets. And today's conversation is very much about profit and loss or performance budgets. And the second form of budgeting is cash flow. So the performance budgets will determine how your business will perform, and your cash flow budgets are the impact they have on your cash flow. Of course, in a couple of months' time, I'm going to be doing a webinar on cash flow, and as I say in my cash flow webinar and workshop, everything you do in your business affects cash flow. There was a client of ours some years ago who took on a contract that effectively would have tripled the size of his business in a market that he only knew a part of, and because he didn't want to do his cash flow budgets and sit down whether he could finance it. In fact, I think I mentioned it in one of the emails I sent out, and within about 6 months he'd lost his business because he couldn't cash flow, couldn't manage the cash flow hurdles that were presented to him. As I said, we're going to focus on performance budgeting because it all starts with performance budgeting. So let's define it. Performance budgeting is a realistic forecast to ensure the business is sustainable in the foreseeable future. The business activity adds value. That's a little bit of a broken record. I'll say it a number of times today. The business will continue to be profitable. That planned growth can be funded, and of course, whether that's funded internally or funded externally, that's part of the consideration, and provide a means of measuring the progress of the business through the predetermined period. So we're actually going to talk about a couple of those in more detail, because we believe that there are two primary considerations for budgeting. And the first is it must be realistic. And the three areas that you're going to really, to put some realism around, are your income targets, your gross and net profit projections. And by the way, I actually do get an opportunity a little later on to talk to you about the difference between gross profit and net profit, which will be good for those of you who are not completely sure about the difference. I will have an opportunity to explain that to you. Now, the second part is over a predetermined period. So we believe, and I'll explain this in a bit more detail in a moment, we believe you should do it on a 2-year period. The first year that you'll chunk down into monthly amounts, the second year in a 12-month block. You'll repeat each May or June. How appropriate is this as a timing for you to think about budgets, because we're just on the beginning of a new financial year. And what I've drawn up here is, 2 columns that look like this, well, they're marked this year and next year. And an expression that I'd love you to take on board is this, and if you follow the bouncing ball, what you do on the 1st of July this year, this coming year, will impact where you end up on the 30th of June next year. So 2 years is a great window to budget for. By the way, I also believe that you should know where you want to be in 10 years' time, but we're talking about budgeting today, and you're going to do it over a 2-year period. So what you're going to do is you're going to chunk the first 12 months into monthly, July, August, September, October, and in an ideal world, a straight line would be absolutely fantastic. But realistically, you need to adjust that straight line in the first 12 months to allow for seasonal or monthly variances for your business. And I don't know any business that doesn't have some sort of variation from month to month or seasonal that's seasonally affected, or you know, around if you're in retail around Christmas, of course you would have this turning the other way, because December, you know, November, December are always big sales months in retail, but maybe in the trades businesses you've got December and January tapers off, and then it picks up again in February, March, April. So again, making your budgets real is an important part, as we talk about at the end, of then how you measure and monitor what you're doing. So it's quite interesting, because there are two different approaches to budgeting, and I'm going to ask a question in just a moment, but there's historic or incremental budgeting, and that uses last year's achievements and changes by an amount or a percentage. So, and it's generally the traditional way budgets, you know, what did we achieve last year? Based on that, what are we going to achieve next year? So we call that historic or incremental budgeting. The second, which is really interesting, is called zero-based. And in fact, what it says is what's possible. If you were about to start a business and you came and worked with me and I said to you, I want you to do a budget, you have no history, you'd have to ask yourself, what's possible? What's possible? We're going to talk about some budgeting questions in just a moment, but what's possible gives you an opportunity to say, well, if I was to achieve this, what could that turn into? You see, what actually happens is, oh, by the way, is either of them right or wrong? And the answer is no. You know, they're both important. In fact, good budgeting uses a combination of both. The challenge with historic or incremental is that it can limit your expectations, you know, based on what you achieved last year. And it's interesting, because a lot of cases I see people going for the budget, what sort of increase? 10% on last year. Why 10%? If you ask what's possible, well, possibly it could be 30% if we did some things on the way through to achieve that 30%. Now, the second part, zero-based, can also set you up for some unrealistic expectations, and that of course means that when you sit down and 6 months later and you go, oh well, I was just dreaming when I put those budgets together. So again, good budgeting uses a combination of both. So this is a poll again, so for those of you, and actually it's aimed at the people who typed yes when I said, have you ever done budgeting in your business? Which did you use? Was it history or zero? When you did that budgeting in the past, was it historic or was it zero-based? So can I just get you to type into that that box again, if you would, into the chat box, and let me know what you believe. Incremental, yep. So, I believe that most accountants want you to think about incremental because it's a safe way of doing it. It also creates an opportunity for you to limit your thinking and it almost limits your entrepreneurial spirit, doesn't it? If you think about, well, this is what I achieved last year, so this is what I'm going to be able to achieve the year ahead. Now, it is about setting yourself up the way you want it. Mainly historic with a bit of, zero-based. There you go. So you see that people who've done budgeting, it's a nice way to actually approach it rather than just taking this pure historic type situation and taking that to the table. So let's now move on to some budgeting questions. And I said I was going to show you these, talk about the sorts of things that you might ask. So how well have you done this year? See, that's a historic question, isn't it? But if you've got a history, then that's fine. Look at this question. It says, were you on or off budget and why? And so some of you, the 70% who said no, haven't done budgets before, you're going to go, well, I didn't have a budget. What I believe that even without formal budgeting, you're likely to have a goal in your head. What sort of, you had a picture of what you'd like to achieve in the year. So were you on or off budget? that's a way to you answer that question. What internal or external influences impacted on this year? Were they a one-off or will they be recurring? What changes did you make to the business this year? You know, did you change the roles of people? Did you move to a bigger premises? Did you downsize? Did you take it home? I don't know. What changes did you make to the business? And that last question is one that you've got to ask yourself. How well did you manage the resources at your disposal? With it, you know, and when I talk about resources, it's not just financial resources. It's people, it's materials, it's premises. It's all of those resources as a business manager you have to manage effectively in your business. So there's some great questions. As I said to you, you will get this webinar. I'm not sure how quick some of you can write. There's mostly too many there to write down all, but you will get a copy of this webinar. You can ask those questions. We certainly ask them at the 4-hour workshop to get you putting figures down onto paper, and we'll talk about that again in a little while. So I want to talk about budgeting categories, and a good thing about business management is when you chunk this massive thing called a budget down into several different parts, it becomes much easier. And at the highest level, I'm going to show you 5 different levels of budgeting categories. So this is a model we use a lot in Brightwater, and it reflects the accuracy of your chart of accounts. So that's an interesting question, because prior to this webinar, I sent you an article called "Who Designed Your Chart of Accounts?" I'm going to ask you that in just a moment, but let me show you what I think a chart of accounts at the very highest level should look like. So at the top should be income or sales, and I've put 100% because your income and sales become 100. Now, it's whether that's dollars or percentage, it doesn't really matter, but your income or your sales will always be 100. Now, you apply against that a thing called cost of sales, and the little yellow box says this is the cost of goods sold, so materials that you buy in to either add value before you sell or just buy in to sell, plus direct costs. Now, direct costs are generally labor and subcontractors and manufacturing on costs, but it's not selling costs. So not my words, by the way, cost of sales. It's a standard accounting convention, but it's often quite confusing for people because you think it's about selling costs, but in fact it's not selling costs. It's not selling costs. It's this thing called cost of sales. So that's why I actually have the word sales in the top line. What does this say? It says you actually have to spend 60 to be able to charge 100. For you to be able to get that 100, whatever that is, that 100% or the $100 in this model, you've actually got to spend 60. So there's one category that becomes very important, and I'll show you why it's important in just a moment. Here's the next category. It's called gross profit. So remember earlier on I said they need your projections need to be realistic. So your gross profit projection needs to be realistic. And by the way, the reason that's gold on this slide is that that's the real income of your business. That's the true gold in your business. And I'll explain why that is in just a moment. Then you've got this next category called overheads or expenses. And finally, you end up with what you pay yourself, which is the net profit. The net profit is your reward for risk. And in fact, if you provide the labor in your business, you're a cost of sale. If you manage your business, you're an overhead. And if you're an owner of the business, then you're entitled to the net profit. So when I look at that, it sort of says that you should pay yourself 3 times for the contribution that you give to your business. I just have 2 little, I never like to let this slide go without me showing you the way we approach this chart of accounts. You see, what that says is that 60, you have a little choice. You have a little choice about what you provide to generate the income, because whatever it is you're providing, there's standards. And look, we all have a certain amount of choice, but you have a little choice. But because the amount is so high, what you need to do is put in place lots of control. And the other part of that then is down here, when we talk about overheads and expenses, you have lots of choice. So I have a poll before I actually move on to that one. I have a bit of a poll if I can. Remember the article I sent out said, who designed your chart of accounts? Could I ask you please to identify who created your chart of accounts? You can take that if you like. So, you know, did you do it? Did your accountant do it? Did your bookkeeper do it? Yep, your accountant. Interesting, isn't it? And my article doesn't say that's wrong, but from a management point of view, yeah, look, there you go. Yeah, your director did it. Okay, so that means someone in the business did it, but the majority of responses, yep, the majority of responses were the accountant. And of course, your accountant wants a report that talks about financial results for taxation purposes and what you want. So he doesn't bother to separate it into these things accurately, because at the end of the day, from a taxation point of view, all you want to worry about is the net profit. All he wants to worry about is your net profit. So again, I suggest to you that thinking about what that's going to look like for your business in setting up your chart of accounts. At the 4-hour workshop, one of the first things we do is focus on your chart of accounts, so that when you budget for the next financial year, you're going to do it accurately. All right, so let me move now from performance budgeting to cash flow budgeting, because once you've completed your performance budgets, you can then move on to cash flow budgeting. It can only be done after performance budgets, and yet it's the reality. What's that expression, where the rubber hits the road? Cash flow is an important part of the performance budget, and this is about, as we'll see in a minute, how you can afford to take the business. So it shows you the impact your performance budgets will have on your ability to pay creditors as they fall due, the impact of debtors and your collection policy, and the availability of money left over to spend. Remember earlier on today I said everything you do in your business impacts on cash flow. Well, you know, there's a couple of them there. Budgeting will identify when cash flow budgeting will identify when cash shortages may occur. Ensure that cash is available for capital and other investments when needed. Identify when the business may need funding in excess of pre-arranged overdraft. And interestingly enough, I mentioned about our family clothing business. So you imagine a clothing factory that closed down for 4 weeks at Christmas. Finding the holiday pay was always a challenge. I can say that from my family business, and part of my experience was with good budgeting and cash flow reporting, we were always able to get an overdraft extension from the bank. So again, you know, if the bank sees that you have this ability to manage your finances, they're more willing to look after you. And of course, the other reason for cash flow budgeting is to ensure that cash is available to meet tax liabilities when they are due. And a client some years ago determined that his profit one year was to be $700,000, which was way beyond anything he'd ever done before. And my comment to him was, that's great. You now give your accountant 12 months to plan a tax strategy. And the interesting thing about his business, because he was planned and budgeted, his eventual profit was actually almost $800,000, even though the original budget said 700. So again, it is about the benefits of budgeting. I talked about KPIs earlier today, and I want to show you a model about KPIs. Some of you may have seen this before if you've seen Brightwater presentations. So budgeting is not just about your finances. It includes all of the performance areas of your business. So it's why you need to budget KPIs. And I use this triangle model just to talk about it. So at the top it says key performance indicators, and on the right-hand side it says the 6 to 10 key measures that ensure you know your business is on track to its goals. So remember earlier on we said budgets help you identify when you're on track or off track. Now the two key words here are performance and goals. And I'm going to show you why they're key words in just a moment. The first one is, if this is a reporting mechanism, this KPIs, where in your business does the performance actually happen? And I suggest to you it happens in a series of functional areas, or what we refer to as functional performance indicators, those there. And in this case, I've got sales, marketing, HR, admin, production. So they're all different functional areas. And if you watch the slide now, they're functional areas, measures for each functional area contributing to KPIs. So let me give you an example of how KPIs can be used and managed in your business. This is not your business, not my business. It's just a hypothetical business. But if you watch up here at the moment where it says key performance indicators, I've just changed that to 10 NCM. That stands for 10 new customers a month. You might want 10 new customers a minute or 10 new customers a year. It really doesn't matter. 10 new customers is what the goal is. Now it's in green for a very important reason. Green's the color of go. So it's no good setting budgets and then just assuming that the universe is going to provide. You actually have to get off and do something about it. So if your goal is 10 new customers a month, what do you do at the end of the month? You stop long enough to check in. So that's in red. And unfortunately, in most small businesses, what I find is we're so busy getting on with the work that we don't stop to check how we went last month. But part of the reason is that we don't have goals. So if we've got goals, we now want to check in. So what does that say? 10 new customers, and we're going to give it a tick. But there might be a couple of other KPIs that are not showing the way we want them. They're a couple of crosses, and that's called management by exception. So those two results are out of the norm, so we're going to go and investigate them. But let me just analyze this a little bit further, because we're going to come down to this functional area and we're going to ask the question, well, how did I get to 10 new customers a month? I'm suggesting that marketing was to generate 30 leads, sales was to convert 1 in 3, and that would give me my 10 new customers a month. So now I've got goals for these two parts of my business. What am I going to do at the end of the month? I'm going to measure them again. So let's just have a look down here under marketing, and marketing achieved 20 leads, yep, whoops, and sales converted 1 in 2. See, at this higher level here, I've got my 10 new clients, I don't have to worry about it, but I do have to go down here and find out what's gone wrong. All right, still got the same results. What happened? This is my story and I can tell it whichever way I like, of course, but if you look, just follow the bouncing ball between the 20 and the L. I'm actually going to tell you what marketing did. See the letter Q appears? Marketing found 20 quality leads. How did they do that? They applied the letter gauge theory that I talked about earlier on and found ideal clients. By the way, sales, you did a great job. You got 1 in 2. We want you to keep it at that rate. You see, whenever you measure and have information, like as in KPIs, you can plan for growth, you can plan to keep things stable, or you can actually plan to put in place some control. And what I mean by growth, you could say to marketing, 20 leads last month was good and I want 22 the month after and 24 the month after that. Oh, and by the way, sales, you need to keep your 1 in 2 conversion stable. So you're going to measure these things every month to see what sort of a result you're achieving in your business. And the concept of control doesn't really have much to do with the conversation about 10 new customers, but it could be. You could have a whole lot of customers falling off the back end. While you're adding 10 new customers in the month, you might be losing 10 old customers because you're not looking after them the way you should. So maybe you want to put in some controls to stop losing customers just because you're acquiring new ones. So let me get rid of the spaghetti that's all over the screen and ask one last question. Who is it that drives performance in your business? It's your team members. And down the bottom of this slide, we talk about personal performance indicators, PPI. And the way we describe this is team members' responsibilities to various functional areas of the business. Two things that stand out for me on this slide. The first one is what you measure, you manage, and what you manage improves. And the second one is, if you tell me how I'm to be measured, I'll show you how I perform. So that relates to people. All right. So as I said, budgeting is not just for finances, it's for a whole lot of the performance areas of your business as well. And so what we're going to do next is we're going to look at how do you record your budgets. So this is a part of the how, and of course we cover this in a lot more detail at the workshop. So there are two ways. The first is budget spreadsheets, and then there's budget worksheets. So I'm going to start with spreadsheets. These are often in Excel, and that's just a sample Excel spreadsheet. And this was designed for your income. So what's my income going to be month by month? And again, chunked down into different income parts of your business. So these are, as I said, often in Excel, and where you work the numbers. The beauty of Excel, of course, is that it adds the numbers up for you and it enables you to make changes if you want to make changes. This is where, do you remember that when I showed you that orange line across the 12 months and where we adjusted them seasonally or seasonally adjusted them or month by month adjusted them to make them realistic. So this is where you do your numbers. And by the way, at the 4-hour workshop, you get a complete budget Excel tool that becomes yours for the rest. So the rest of your days. It's a tool that you can use for this year and you can continue to use from this year on. It's a powerful tool with a whole lot of formula already built in and makes budgeting a hell of a lot easier than starting with a flat screen. So I said there were two parts that you do. The first is budget spreadsheets and the second is budget worksheets. It's where you document your thinking or rationale for the numbers in the spreadsheet. So it's interesting because this is about getting it out of your head and down onto paper, because in a year's time you won't remember why you decided a certain figure would be a certain figure. It says commentary for every line in your budgets. So even if it's you know, X dollars, the same as last year, but you wrote it down and you put the dollars and you said, and the rationale was that you actually wrote the same as last year. So partway through the year, you might determine that the same as last year really wasn't appropriate, an appropriate comment, or sorry, an appropriate budgeting exercise, but that's what you did when you sat down to do your budgets. So you do it for this year and for next year, for the 2-year window, but this is the beauty of those worksheets. They're your go-to document when there are variances. You know, it's like, and what did I say earlier on? When you're off course, not if you're off course, so it's your go-to document when there are variances, because you won't necessarily remember what your thinking was when there is a variance. So again, we provide these tools to you at the 4-hour workshop. It makes it easier to do next year's budgeting, of course, because it starts to give you an understanding of how you arrived at the figures. Now, this is a hidden key to effective budgeting, and I've never heard anyone talk about this when they've talked to me about budgeting, but I think it's really valid. So you use the information from last year to make a value judgment. See those two words, value judgment, for the year ahead. And so what we recommend you do is file last year's information. You know, the reality is you've got to resist the temptation to go back to last year. My comment here is, if you're always looking backwards, why bother planning forwards? You see, sitting here now, you get to plan where you want to take your business for the next 12 months. And from this point onwards, you're going to enter your budgets into your accounting system, and your reporting is now actual to budget by month and year to date. My point here is this is a hidden key to effective budgeting. So hopefully when we get to that part of it with you later on, over the next 6 weeks or 4 weeks or 6 weeks, you'll be able to do that. Once you've got your budgets, you then need to do monthly reporting. Again, the red, that red in the KPIs, that red color that you stop long enough. No, not that you're in the red. It's the red color that you stop long enough to do the monthly reporting. Now, it's a disciplined way of reviewing the month's performance, and it's disciplined even if only reporting to yourself. It becomes absolutely critical that you document it so you don't have to remember why there were variances. Because when the variances happen, they're fresh in your mind. It happened this month, so you know what they are. You need to know what they are, financial and performance and KPI areas, actual to budget for the month, actual to budget for year to date, and I needed to, and that's that. I guess they're the things you do in the monthly reporting. All right. Now I have a gift for you, because as a society, we have a very poor attitude to personal budgeting, and it's the same in most businesses. So here's a fantastic tool that will help you determine what sort of profit you need your business to generate to pay off your home and give you more freedom from your business. And if you've got your pen and paper there right now, that's your web address. It's on the government website. It's one of the best bits that I've ever found on a government website. It's www.moneysmart.gov.au. So again, using this tool will determine what sort of profit you need your business to make to meet your lifestyle expectations. So as I said, that's the end of, here's the summary of what we've covered today: your keys to success in budgeting, the why, you need to make them realistic, a predetermined period, cash flow and KPIs, spreadsheets and worksheets, file last year's monthly reporting, and personal budgeting. So this is the final poll for this webinar. So, and we're getting close to completion time. So thank you for staying with me, though I stuffed up about the first 8 minutes of today. Here's my poll question: did you learn something in this webinar? Can I actually get you to type yes or no? That's just great feedback for us as we work through. And if you want to make a comment for anything stood out for you, that will be great as well. So thank you. That's great. I can see a few yeses already. That's fabulous. Thank you. Yeah, it's a formative overview. Well, I did say that at the beginning, didn't I? That it would, it certainly wasn't going to, you weren't going to leave with a set of budgets for your business, but certainly give you a good overview of that. So thank you for that again. If you'll bear with me for a minute or two longer than, longer than we have, just a couple of minutes past the 2 o'clock. For those of you who have to go, we will be in touch with you at the end. Remember I said to you that today was a Business Improvement Toolbox webinar, and there are 2 opportunities next, and we call it Special Offer 1. Next Thursday, a week from today, is a 4-hour workshop, and it's $385. And I guess what I want to ask you is, what did you type in? What was your commitment at the beginning of this workshop to make a difference? And if you really want to do something different, then this is a one to do. Here's some of the things you get for that workshop: Excel budgeting spreadsheet, all other forms that I referred to in the webinar. You work directly on your performance and KPI budgets, and you can do it either online or face-to-face. And I know, as I said earlier, I think there's a couple from WA who are logged in. So again, you can do this online. The bookings from today's webinar receive an extra 1-hour review and revise webinar. So after about a month after the 4-hour workshop, we'll provide you a 1-hour revise and review webinar. The opportunity to come back together and determine how you answer some questions, determine what you need, and that will still be before the end of July and give you an opportunity to make sure your budgets are in place. Now, if you're seriously committed to budgets, and what I want you to do is, if you're interested in the special offer 1, just type yes in the chat box. We'll send you a registration and an Eventbrite link. The second offer is some one-on-one coaching and I just need to do this, some one-on-one coaching. So it's the 4-hour workshop plus 3 2-hour one-on-one coaching sessions. You'll have your own business coach working with you. Those 2-hour sessions happen over a period of 4 weeks, and you implement your budgets for your business. So it's really, the workshop is about getting you to work in that workshop environment. You will go away and have to do some work, whereas this opportunity is you having your own coach. So you do the workshop, and then for the next 4 weeks you have a one-on-one coach working with you through the material that you started to develop to make sure that everything works effectively for your business. That coaching, that one-on-one coaching opportunity is $1,500. It's normally $1,800. For those of you who are here today at this webinar, it's discounted by $300, and you can pay that off over 3 months at $500 a month. And that one says you have to type in #2yes into the chat box. Now, you might ask a question is, what's my guarantee? We do provide a guarantee. It says you are satisfied that your Brightwater program adds value to your business, or it's free. And both the workshop and the one-on-one coaching are limited spaces. We have a limit of 12 people in the workshop, whether that's face-to-face or online, because we want to be able to spend time with you. And one-on-one coaching, there are only 6 places available. So I thank you for your participation, and we've actually got a couple of people who've typed in yes for both of those offers, so thank you for that. We are going to provide these webinars once a month and workshops to follow. So if you have enjoyed today, we certainly appreciate some feedback. There is an email coming to you either today or tomorrow in the next 24 hours, and it has a SurveyMonkey link. If you could complete that for us, that'll be some great feedback. It'll help us improve the webinars, and of course I'll improve by learning to turn my microphone on at the correct time instead of delaying. So I am going to stand around now for another 10 minutes or so. If you want to, you can actually can I do this? I can unlink I can unmute your microphones, and we can actually all get on and have a conversation if you want to stay on and ask questions, as I'm saying. But welcome, thank you, and we'll talk to you soon. Yeah, have I turned you all on, those of you who are left? So do you have any questions? All good, thanks Anthony, thank you. Okay, I've got some feedback on the way through. I have tried turning on some microphones. You may have to turn them on yourself if you want to talk to me. I'm not sure. Actually, what I haven't done is I haven't put up the last slide, which just, if I might, I'll just do that. Sorry, there we go. That's the last slide. Okay. So if there are no questions, I am available. If you'd like to call me or talk to me, then I'm happy to interact with you. We'll talk to you again soon. Someone's just ringing, so thank you and good day. Do you want to just go down the bottom and turn that off.